July 2025 is not just another date on the calendar. For pensioners, it marks the rollout of 5 significant changes to the UK state pension system that will affect how much money you receive, how and when you access it, and what additional support you may be eligible for. Whether you're already receiving your pension or approaching retirement, being informed about these developments can help protect your finances and ensure you don't miss out on entitlements that could be worth thousands of pounds each year. These changes are not speculative. They've been confirmed by the Department for Work and Pensions and HM Treasury, and they are taking effect as we speak. The first major change is the confirmation of the new payment rates. Following the implementation of the triple lock mechanism, the full new state pension has increased by 4.1% from April and is now reaching pensioners in their July payment cycle. This means that those receiving the full new state pension will now get approximately £230.25 per week, up from around £221. For someone receiving this on a 4-week cycle, this translates to over £920 per month. The basic state pension, which applies to those who reached pension age before April 6, 2016, has also gone up, with weekly payments increasing to around £176.45. While the increase may seem modest in the face of ongoing cost of living pressures, it represents a meaningful step forward for many pensioners struggling to manage rising bills and essential expenses. The second change is a quiet but critical update to pension credit thresholds. If you are a single pensioner with a weekly income below £218.15, or part of a couple with a combined weekly income below £332.95, you may now qualify for pension credit, even if you were previously rejected. This change will bring thousands of pensioners into eligibility, many of whom are unaware they now qualify. The guarantee credit component of pension credit tops up your income to those minimum levels, while the savings credit component can reward those with modest savings or private pensions. On top of this top-up, claiming pension credit can unlock additional benefits such as full council tax reduction, free NHS prescriptions, help with rent or mortgage interest, and even free TV licenses for those over 75. These extra benefits can collectively be worth well over £3,000 annually. The government estimates that more than 850,000 eligible pensioners still haven't claimed, leaving millions of pounds in unclaimed support. July is the right time to check your eligibility and make that call. The third big change arriving in July involves digital access. The DWP has expanded its online services, enabling pensioners to manage their payments more easily through a personal tax account on gov.uk for those who are digitally confident. This means you can now log in to view your upcoming payment dates, check the exact amount you're due, update your bank details, or change your home address all without having to wait on the phone or send forms through the post. This streamlines a process that many older pensioners have long found slow and frustrating. But for those who aren't comfortable with online services, support is still available through helplines, local libraries, Age UK or Citizens Advice. The emphasis on digital management is designed to reduce errors and avoid payment delays, but it also means that keeping your online account updated has never been more important. The fourth change is about timing. Unlike other months, when public holidays can disrupt pension payments, July 2025 contains no bank holidays across England, Scotland, Wales, or Northern Ireland. That means the state pension schedule will proceed without interruption, following the usual DWP pattern based on the last 2 digits of your national insurance number. If your number ends in 0 to 19, your payment date is Monday. If it ends in 20 to 39, it's Tuesday. For 40 to 59, it's Wednesday. Those ending in 60 to 79 are paid on Thursdays, and numbers ending in 80 to 99 are paid on Fridays. The specific July dates are the 7th, 8th, 9th, 10th, and 11th for the first week, then recurring every 7 days. This consistency allows pensioners to plan ahead with confidence, especially if direct debits for rent or bills are scheduled immediately after payday. Knowing the exact date your money will arrive can prevent overdraft charges and financial anxiety. It's one less thing to worry about in an already stressful economic climate. The fifth and final change is a tightening of record verification and anti-fraud measures by the DWP. Starting in July, the department is increasing its frequency of eligibility checks and data reviews. Letters are being sent to selected pensioners requesting confirmation of their residency, bank details, and living arrangements. These are not scam letters. They're part of the DWP's expanded program to ensure public funds are going to the right people and to prevent overpayments or duplicate claims. If you receive one of these letters, do not ignore it. Failing to respond within the stated time frame could result in your payments being paused. Instead, gather the requested documentation such as a bank statement, recent utility bill, or proof of address and send it back via the secure channels provided. If you're unsure whether a letter is genuine, you can always contact the Pension Service directly using the number on the gov.uk website. While the checks may feel intrusive, they are part of a larger effort to maintain the integrity of the pension system. And for most pensioners, responding is a simple process that takes less than half an hour, but ensures your payments continue without disruption. These 5 changes: an increase in weekly payments, new pension credit thresholds, improved digital access, a predictable July payment schedule, and enhanced verification represent a turning point in how the UK state pension system operates. They bring both opportunities and responsibilities. For many pensioners, these updates will lead to more money in the bank, less hassle with paperwork, and greater confidence in financial planning, but they also require action. Check your eligibility for pension credit. Make sure your information is up to date and be prepared to respond to any communication from the DWP. Whether you rely solely on the state pension or receive a combination of benefits and savings income, staying informed gives you the tools to protect and maximize what you've earned. July 2025 is not the time to be passive. It is a moment to be proactive. Speak to someone you trust, reach out to a benefits advisor, or go online and explore what's changed. Even a 10-minute check could reveal that you're entitled to hundreds or even thousands more than you thought. And if you know someone else who might benefit, tell them. Because this year, the people who stay informed and take action are the ones who will feel the difference most in their monthly income and overall security. These changes are real, they are live, and they are already reshaping the lives of pensioners across the UK.